Imagine doubling your money by investing in just 3 companies set for explosive growth in 2025. The next wave of wealth is being created right now, and those who act decisively will reap the rewards. It's not about timing the market. It's about spotting unstoppable trends and the companies leading them. Today we'll break down 3 powerhouses: a semiconductor and software leader, an AI and graphics pioneer, and a digital advertising and cloud giant. These aren't just stocks, they're tickets to the future of technology. I'll reveal why these are my top picks for 2025, the risks, and how you can position yourself for potential massive gains. Subscribe and stay tuned, this could change your financial future. First up, Broadcom, ticker AVGO, a leader in semiconductors and infrastructure software. This company is a cornerstone of modern technology, playing a pivotal role in the devices and systems we rely on every day. Broadcom's technology is in nearly every electronic device you own, from the smartphone in your pocket to the Wi-Fi router in your home. Their chips are the silent workhorses that make our digital lives possible, making it the ultimate picks and shovels play for the tech industry. Just like the suppliers of tools during the gold rush, Broadcom provides the essential components that enable the tech giants to innovate and grow. Every smartphone, data center, and Wi-Fi connection likely relies on Broadcom's chips. Their reach extends into the very heart of our digital infrastructure, ensuring seamless connectivity and performance. But Broadcom isn't just hardware anymore. The company has strategically expanded into software, creating a more balanced and resilient business model. Under CEO 𝗗𝗜𝗏, it's become a hybrid hardware-software powerhouse through smart acquisitions like CA Technologies, Symantec's Enterprise Security, and most recently, VMware. These acquisitions have not only diversified Broadcom's offerings but also strengthened its market position. This strategy creates a sticky ecosystem and highly predictable recurring revenue. By integrating hardware and software, Broadcom ensures that customers remain within their ecosystem, driving long-term growth and stability. The VMware acquisition is a game-changer, putting Broadcom at the heart of enterprise IT budgets and allowing it to offer integrated solutions from chips to cloud software. This move positions Broadcom as a critical player in the enterprise technology landscape. Broadcom's dual focus, high-growth semiconductors and stable, high-margin software, reduces risk and boosts profitability. This balanced approach allows the company to navigate market fluctuations more effectively. Financially, Broadcom is a cash machine, fueling reinvestment, acquisitions, and a rapidly growing dividend. The company's robust cash flow enables it to continuously invest in innovation and expansion. Their policy of returning 50% of free cash flow to shareholders means the dividend will keep rising as earnings grow. This commitment to shareholder returns makes Broadcom an attractive investment for income-focused investors. Broadcom is at the center of key trends: AI, cloud computing, 5G, and electrification. These are the technologies that will shape the future, and Broadcom is well positioned to benefit from their growth. The risks: integration challenges with VMware, geopolitical tensions, and economic downturns. But Broadcom's diversified model makes it resilient. While these risks are real, Broadcom's strong fundamentals and strategic positioning help mitigate them. The market still underestimates the combined Broadcom-VMware earnings power. As the integration progresses, the true potential of this merger will become more apparent. As synergies kick in, expect a significant stock re-rating. The combined entity's enhanced capabilities and market reach will likely lead to a revaluation of Broadcom's stock. This is a rare blend: high growth, reliable income, and a durable competitive advantage. Broadcom's unique position in the market makes it a compelling choice for investors seeking both growth and stability. Broadcom is the quiet giant powering the digital economy, a core holding for any tech-focused portfolio. Its extensive reach and critical role in modern technology make it an indispensable part of the digital landscape. Don't overlook this one. As VMware integration accelerates, Broadcom's true value will shine. The synergies from this acquisition will unlock new opportunities and drive further growth. It's a top pick for 2025 with fundamentals too strong to ignore. Broadcom's strategic vision and execution make it a standout in the tech sector. The company commands a market cap of $1.4 trillion, with earnings per share of $2.72 and a price-to-earnings ratio of 109.33. For 2024, Broadcom generated $51.57 billion in revenue and delivered $5.89 billion in net income, figures that underscore just how richly investors are valuing its earnings power today. If you want exposure to the biggest tech trends, Broadcom should be on your radar. Its involvement in AI, cloud computing, 5G, and electrification positions it at the forefront of technological innovation. The future is being built on Broadcom's foundation. As technology continues to evolve, Broadcom will remain a key player, driving progress and innovation. Next up we have Nvidia, ticker symbol NVDA, the undisputed king at the heart of the artificial intelligence revolution and the world of graphics processing. If you've heard about AI, machine learning, or even high-end gaming, you've almost certainly heard the name Nvidia. This company has become synonymous with cutting-edge technology, and its influence stretches far beyond what most people realize. Nvidia's GPUs, which were once the go-to choice for gamers seeking the ultimate graphics experience, have now become the gold standard for powering the AI revolution. What started as a quest to make video games more immersive has evolved into a mission to accelerate the future of computing itself. Today, Nvidia's chips are the engines behind everything from blockbuster video games to the most advanced AI models in existence. The secret sauce? Their parallel processing architecture. Unlike traditional CPUs, Nvidia's GPUs can handle thousands of tasks at once, making them perfect for training and running complex AI models. This unique capability has made Nvidia the backbone of the AI boom, powering data centers, research labs, and cloud platforms around the globe. Every major cloud provider, think Amazon, Microsoft, Google, and nearly every ambitious AI startup, is in a race to secure Nvidia's chips. The demand is so intense that Nvidia's supply often sells out months in advance, fueling revenue growth that's nothing short of historic. The company's chips are now the most sought-after resource in the tech world, and that demand shows no signs of slowing down. But what truly sets Nvidia apart isn't just the hardware, it's the software. Nvidia's CUDA platform is a game-changer. CUDA is a specialized programming environment that allows millions of developers to tap into the full power of Nvidia's GPUs. It's not just a tool, it's an entire ecosystem that has become the industry standard for AI and high-performance computing. This sticky ecosystem creates massive switching costs for developers and companies alike. Once you're building on CUDA, moving to a competitor is a huge undertaking. That's why Nvidia's lead keeps growing, and why competitors struggle to catch up. The company's relentless focus on both hardware and software innovation has created a moat that's incredibly hard to cross. At the helm is CEO Jensen Huang, a visionary leader who's become legendary in the tech world. Under his guidance, Nvidia has consistently pushed the boundaries of what's possible, launching new AI chips like the Blackwell platform that keep the company 2 steps ahead of the competition. Huang's bold bets and relentless innovation have made Nvidia a household name in both Silicon Valley and Wall Street. The result? A virtuous cycle. The world's best researchers and engineers flock to Nvidia's platform, driving breakthroughs in AI, robotics, and scientific computing. As these breakthroughs happen, demand for Nvidia's products only grows, creating a self-reinforcing loop of innovation and adoption. Now it's true, the stock looks expensive by traditional metrics. But the AI market is still in its infancy, with estimates suggesting it could be worth trillions of dollars over the next decade. We're talking about a technological shift on the scale of the internet or the smartphone, and Nvidia is positioned right at the center of it all. Nvidia's explosive growth rate makes old-school valuation models less relevant. This is a company where the story is all about the future, about the massive opportunities that lie ahead as AI transforms every industry, from healthcare and finance to transportation and entertainment. And it's not just AI. Nvidia's gaming division continues to thrive, powering everything from esports tournaments to virtual reality. Meanwhile, their automotive division is making waves with self-driving car technology, opening up entirely new markets and revenue streams. Of course, there are risks. Rising competition from tech giants and chip startups, potential slowdowns in AI spending, and geopolitical tensions that could disrupt global supply chains. All of these are real challenges. But Nvidia's deep software moat, world-class execution, and first-mover advantage make it uniquely resilient. The company's software ecosystem is so entrenched that it acts as a fortress, protecting Nvidia from would-be rivals. Developers, researchers, and enterprises are all locked in, making Nvidia the clear platform leader for the foreseeable future. In many ways, owning Nvidia today is like owning Microsoft in the 1990s or Google in the early 2000s. It's a bet on a generational shift in technology, a chance to ride the wave of innovation that will define the next decade. Looking ahead to 2025 and beyond, expect Nvidia's dominance to only grow as demand for their AI platforms explodes. The company is scaling up production, expanding its product lineup, and forging new partnerships across the tech landscape. The recent stock split has made shares more accessible to everyday investors, adding yet another tailwind to the company's momentum. More people can now participate in Nvidia's growth story, fueling even greater interest and liquidity. Nvidia's market cap stands at $4.24 trillion. It posted EPS of $3.54 and trades at a PE of 49.20. Revenue for 2024 reached $130.5 billion, translating into a hefty $72.88 billion in net income. As for the stock, the current price of $174.18 sits 39.19% below an estimated fair value of $242.44. suggesting meaningful upside if those valuation models play out. Don't let the high price tag scare you away, the opportunity here is massive. Nvidia is building the digital infrastructure of the future, and its technology will be at the core of everything from smart cities to autonomous vehicles and beyond. For anyone seeking exposure to the AI revolution, Nvidia remains a must-own growth stock. It's the company that everyone else in the industry is chasing, and its lead only seems to be widening. The numbers are staggering, the competitive moat is deep, and the market opportunity is truly colossal. Nvidia is not just participating in the AI revolution, it's leading it. In every sense, Nvidia is the definition of a red-hot growth story, one that's shaping the future of technology before our eyes. Finally, let's talk about Alphabet, ticker GOOG, the digital advertising and cloud computing powerhouse that's quietly shaping the future of technology. Alphabet is more than just Google. It's a sprawling ecosystem of innovation, with its hands in everything from search and video to self-driving cars and cutting-edge artificial intelligence. In the world of tech giants, Alphabet stands out for its resilience, adaptability, and relentless pursuit of new growth engines. At the heart of Alphabet's empire is Google Search, a product so dominant it's become a verb. Despite years of competition and technological change, Google Search remains a virtual monopoly, now supercharged by the integration of advanced AI. With features like AI overviews and smarter search suggestions, Google is making it easier than ever for billions of users to find what they need, faster, more accurately, and with a personalized touch. Not long ago, there were real fears that generative AI would disrupt Google's search business, but those concerns have faded. Instead, AI is making search more powerful and indispensable, helping users sift through the world's information with unprecedented speed and relevance. Google's ability to adapt and integrate new technology has only strengthened its grip on the market. Then there's YouTube, Alphabet's video juggernaut. YouTube isn't just surviving, it's thriving, with over 2 billion logged-in users every month. The platform dominates online video from short-form clips to long-form content and continues to expand into new areas like live streaming, podcasts, and even shopping. For creators and advertisers alike, YouTube offers massive monetization opportunities that keep growing year after year. What makes YouTube even more formidable is its use of AI. The recommendation engine, powered by sophisticated algorithms, keeps viewers engaged for hours. AI-driven tools help creators edit videos, optimize content, and reach new audiences. For advertisers, AI ensures that ads are targeted with laser precision, maximizing value for both brands and viewers. This virtuous cycle makes YouTube more valuable for everyone in the ecosystem. But the real growth engine for Alphabet today? It's Google Cloud. Once seen as a distant third in the cloud wars, Google Cloud has transformed itself into a serious contender, offering businesses the infrastructure and tools they need to harness the power of data and AI. Google Cloud is now profitable and growing faster than both AWS and Azure, the longtime leaders in the space. This rapid growth is fueled by demand for AI-powered solutions, data analytics, and secure cloud infrastructure. Enterprises are increasingly turning to Google Cloud for its innovation, reliability, and deep integration with Google's AI capabilities. A key differentiator for Google Cloud is Alphabet's deep expertise in artificial intelligence and custom hardware, like its tensor processing units, TPUs. These chips are purpose-built for AI workloads, giving Google Cloud a unique edge in performance and efficiency. Companies serious about leveraging AI are flocking to Google Cloud, knowing they'll have access to the best tools and technology available. At the center of Alphabet's AI push is Gemini, its flagship AI model. Gemini is being woven into the fabric of every Google product, from search and YouTube to Gmail and Google Photos. This integration allows Alphabet to leverage its massive user base, rolling out AI features at a scale few companies can even dream of. With billions of users across its platforms, Alphabet has a distribution advantage that's almost impossible to replicate. This reach lets Alphabet monetize AI innovations at a scale that's unmatched in the industry, turning new technology into real revenue and profit. Beyond its core businesses, Alphabet is also investing in the future through its other bets. Projects like Waymo, the self-driving car pioneer, and Verily, which is focused on healthcare technology, are long-term moonshots. While these ventures are risky, the potential payoff is enormous. If even one of them succeeds, it could add billions in value to Alphabet's already impressive portfolio. Financially, Alphabet is a fortress. The company sits on over $100 billion in cash, giving it the flexibility to invest aggressively, weather economic storms, and return capital to shareholders. In 2024, Alphabet announced its first-ever dividend and continues to execute massive share buybacks, rewarding investors while maintaining a rock-solid balance sheet. Despite all this, Alphabet stock still trades at a discount to other tech giants. For investors, this means you're getting exposure to world-class growth engines at a reasonable price, a rare combination in today's market. Of course, there are risks. Alphabet faces ongoing regulatory scrutiny, especially around privacy, antitrust, and digital advertising. Competition in AI and digital ads is heating up, with rivals like Microsoft and Meta investing heavily. But Alphabet's vast resources, deep talent pool, and culture of innovation give it a strong edge in navigating these challenges. As Google Cloud continues to expand and AI becomes more deeply integrated into every aspect of Alphabet's business, the market is likely to re-rate the company higher. The combination of cloud growth, AI leadership, and a robust financial position sets Alphabet up for a new era of expansion. Alphabet offers a rare mix of growth, value, and resilience. It's not just a tech stock, it's a foundational holding for any long-term portfolio, providing exposure to the most important trends in technology, from AI to cloud to digital media. Looking ahead to 2025, Alphabet is poised for another year of strong performance. With its growth engines firing on all cylinders and new innovations on the horizon, the company's momentum is only building. Don't let Alphabet's massive size fool you. This is a company that's re-accelerating, not slowing down. Its ability to reinvent itself and find new avenues for growth is what sets it apart from the rest. Alphabet is at a $2.59 trillion market cap. The company reported EPS of $9.48 and a PE of 22.46, pairing that multiple with massive scale. $350.02 billion in 2024 revenue and $100.12 billion in net income. Together, these three giants illustrate the spectrum of growth, profitability, and valuation shaping today's market leaders. For investors seeking balanced exposure to AI, cloud, and digital advertising, Alphabet is a smart, lower-risk pick. It's a company that combines stability with innovation, making it a cornerstone for anyone serious about tech investing. The market still underestimates Alphabet's true earnings power. With so many growth levers and a track record of execution, there's significant upside that's yet to be fully recognized. Alphabet is a resilient giant, ready to enter its next phase of growth. For those looking to invest in the future of technology, it remains one of the most compelling opportunities out there. There you have it, Broadcom, Nvidia, and Alphabet. Three red-hot growth stocks perfectly positioned for 2025 and beyond. Each dominates its market, has a massive moat, and sits at the center of the tech and AI revolution. While no investment is risk-free, their growth, execution, and financial strength make them my top picks. Want to level up your investing? Check out my Value Stocks Investing Master Course, link in the description. For exclusive tips and analysis, join the Stocks Galore Patreon community. Now, your turn. If you could only invest in one of these for the next 5 years, which would you choose and why? Let me know in the comments. Don't forget to like, subscribe, and stay tuned for more investing insights.